Boom, boom,
You press the button. I think that means we're live.
What do I do right now, Case?
You hit the button.
Here we go.
Just another Wednesday show for everybody out there.
Y'all know how this goes.
Yep.
All right. Wait for the beat. Wait for the beat.
And there it is.
It's so impressionable.
At a certain point, we just might be getting hit up to make beats for people.
Call that the drum. Wait, what do we call that?
The gumdrop.
The gumdrop.
Yeah, I don't know.
I love it. I love it.
All
we are
right.
here. It is, what day is it, Casey?
Hump Day Wednesday.
Someday, what up? We're bringing forth a live broadcast from the NMLS studio, right, sir?
Absolutely. And guess what we are? 6 feet apart, sir. Making sure we're keeping our safety precautions in place.
Spirit fingers.
Spirit fingers.
I love it. Let's bring it around the horn. Camera 1, 2, and 3. Oh,
I like the camera 3.
you gotta love that. And this beat just keeps dropping like it's hot. And today, you are tuning in to MLO. My name is Nett, your host of the podcast.
Yes,
and
sir.
Of course, my main man, Casey.
Casey Carpenter, you guys, is Navy vet and trusted mortgage advisor.
We got that 1-2 punch today for a hot topic. For all those people watching and not listening, this is a big one, guys.
Yeah, it's a good one.
5 myths.
5 of them.
I think it's a really big deal because actually, let me back up. I'm going to roll into a little story.
Story time.
Early story time. Da, 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 da. Early story time, my friends. So, Case, before I was even in the mortgage industry, my wife and I wanted to buy a house. I was scared. I was super scared to even buy a house, right?
Yeah, for sure.
But for some reason, you know, Chris and my wife, she's like, we got to get out. Our apartment alone went from 700 and something a month, skyrocketed up to 1,200 a month.
Wow.
So here in the port, this was many, many years ago, but we had a huge bump in rent.
Yeah.
And people were getting forced out. This was before rent control and increases, right?
Mm-hmm.
So Kristen pushed us to buy a place. And I had heard from literally a networking event,
Nice.
trusted source.
Yeah.
That I could not actually apply for a mortgage until I was at my current job for 2 years.
So you got some great information right out of the gate is what you're telling me.
And I fought it within our marriage for many, many weeks over and over at the dinner table, Casey, all based on information. And the moral of that story is that is not exactly true. There's so many circumstances that you can overcome. You can bridge together work history. You can explain promotions and job changes.
Absolutely.
And there's a lot to that is a whole nother episode in itself. But the reason why I bring that up is that goes into the description of this entire app of being like, don't listen to everything in the backyard barbecue, right, Casey? I mean, come on.
Yeah, and that's just what it is, guys. So that what we're going to go over today for you guys is just kind of these 5 rampant mortgage myths that are out there that you're going to hear these days. And we're going to roll right into it right out of the gate. I think everyone out there is hearing this. You're hearing it on the radio. You're hearing it on TV, stuff like that. Rates are low, right? Rates are low. Rates are low. Everybody get in. They're just low, low, low. Does that mean that everybody qualifies for a low interest rate? Because you're seeing it blasted out there, right? So that must mean everybody gets the 2.875 that they're just showing all over the place, right?
Nailed it.
Does that mean you actually get that rate? Let's find out, because it's a myth.
No, I'll tell you this right now, it's not. And the way I like to explain it is, interest rates that are advertised, there's that tiny little fine print, right?
Yes.
So when you're watching TV, we've all seen that commercial. You can own this Mercedes for $199 a month, 0 down. Let me ask you this. Have you ever met anyone who has actually gotten into that C class, 0 down, $199 a month.
No,
Absolutely not. You show up to the lot and they're like, oh, we only had one car with that exact financing options.
Exactly. I did see the commercial last night too, and I was like, oh, there it is. I could get it.
You're all scratching your head. Maybe I could drive a Mercedes. No. But in all seriousness, a little bit different, but in the sense that most advertised rates, Casey, are going to be for a certain applicant, meaning like tier 1 credit. So absolutely high-end credit, huge down payment, which is very, very rare. It's
True.
A small percentage of actual home buyers. So it's not going to be your traditional, say, first-time home buyer, mid 600 credit score, low 700s with maybe 3 to 5% down max, or even someone maybe utilizing down payment assistance, right?
Right.
Those are not the rates associated, nor there are some other factors that not all rates are equal.
That is a great way to put that, Eddie. Not all rates are equal. No, they're not. They're not equal. And at the same time, too, you have a lot of your own personal financial DNA features, that I like to call it, that factor into your interest rate and what it's going to be. So what's being promoted out there, like you're saying, yeah, it could be the 2.875, but it's based off this down payment with this credit score and stuff, and it's all in that fine print. Your financial situation most likely could be different, which would then in turn could give you a different interest rate than that's being broadcasted out there, right? So you went in thinking you're all 2.875, but at the end of the day, maybe you end up at 3.75 because of your criteria and the features. But I was blasted back, right? Because I thought it was going to be the 2.875. So I think kind of the moral of that, myth that's out there is it's not really a myth. You just need to do your research. You need to know what your qualification features are and where that's putting you at for the program and rate scale.
Yeah, it's a really complicated subject because I think so many different lenders A, advertise, but B, communicate the rates and the terms differently.
Yes.
So you might have one lender that might have a slightly higher rate, but their fees are lower. Yeah. And they might not be charging, if you've listened to any of our episodes, you understand it, but they might not be charging discount points.
Right.
So that's a huge thing. You might be working with someone that charges an origination fee, but no flat underwriting or processing fees. So it's really hard for the person that's just trying to jump in. They've got their full-time job, family, kids, no kids, whatever. And then they're just trying to do this at 6:30 at night before, the NBA playoffs, and their eyes are tired.
Yeah.
And they're like, oh, okay, that sounds good. I mean, how many times have you just made an offhanded decision?
Right. I mean,
because you're tired. Like most of the consumers out there, and there are clients, and we understand this here at the MLO team, understand that it's been a long day. So we're going to lean toward education. And I think, though, the complexity of trying to understand the algorithm from all the other lenders is impossible and difficult to summarize within a paragraph. You really need to know as a consumer, when you're applying and talking to a mortgage advisor, it is key to really ask some key questions and really gauge the honesty. I think that's the easiest way to go. And I'm kind of going the heart. I could easily go on the end and just slam a lot of other people and other people in our industry that don't really do a really great job. But I think lean toward your gut and lean toward like, hey, what's the vibe I'm getting from this initial consult? Yeah. Is this person being honest with me? For me, and here at the MLO team, we take a huge sense of pride on building a relationship, which is an overused term, but taking the time to educate. We'll take that application in. We're going to build out spreadsheets for you. We're going to calculate anywhere from a minimum of 3 options to 5 options for you. We're going to record video of ourselves, screen sharing, and sending you links to watch that walkthrough, or setting up independent Zoom meetings. So instead of you trying to memorize, how do I calculate all this? Get a feel for the integrity of the representative working with you, right, Case?
Absolutely. And I'm sure, we've all felt it. Like, you have that inner feeling inside of you that tells you, maybe this isn't the right connection for me, or we're not, maybe this guy seems a little shysty, or whatever it is. So that's a great point. Go off of your judgment, get the information. But like Addie's saying, all rates are not equal. That 2.875 could have costs for one lender could not have costs for another lender. So it's a great way to
focus on the APR, not the note rate, the APR. That calculates in all the loan associated costs with your interest rate.
Yep.
That is key. And if you ever need a second opinion, I did this for somebody at an out-of-state place, a past client that moved, and I was rolling over their loan estimate and gave them some great insight. And it was weird because that individual, a former client of mine who went to a state I wasn't licensed in, so I couldn't assist him, was uncertain, thought he was getting screwed over by his mortgage advisor. And he sent me the loan estimate. I looked through it and everything. And I explained all of his speed bumps and the struggles. And that loan advisor didn't do anything wrong. Nothing wrong. Where they failed was communicating the costs and why they were displayed that way, because it is confusing.
Yep.
So I don't want to get too long-winded. We're 1 out of 5. We're running a marathon today, guys. So
yeah, we'll keep the other one shorter. I mean, the first one, it's a big deal. It's blasted out there, guys. So just do your due diligence. Know that, that low rates aren't necessarily mean you're going to get that as a consumer. So just do your due diligence. And let's roll on to this.
Yeah, popping off to number 2, everyone. This is a really key one. There's a huge misperception in the market that getting a mortgage is easy. There's tons of, and let's back that up. Getting a quality pre-approval is easy. Because, there's a lot of platforms out there. We can go online and in 4.5 minutes, we'll give you a decision.
Damn.
Are you kidding me? Yeah. You're better off going to the drive-through Starbucks and asking your barista to write something up on a sticky note. You know what I'm saying? It's
Absolutely.
like, come on.
Yeah.
No, but a real consult, an actual advisement, a partnership and a pre-approval that is local to the region that you're buying in. Someone that's going to stand up for you and actually, review your situation and deep dive into it. But that is super important. But moving into getting into a mortgage is easy or not is number 2. Casey, 2020 has started to be a lot of differences, right?
Yeah, there's a lot of factors going on that we're just dealing with every day. The Feds, Fannie Mae, Freddie Mac, changing stuff constantly. So that's just part of our job is being transparent about those changes to our clients, making sure everyone's aware. But, going through a mortgage again with your personal, DNA of your finances and your credit scores and all that stuff plays in a factor. But we're seeing just a lot of volume right now in the industry with low rates, right? Like we were talking before, you're seeing a lot of refinances happening. And what we're noticing, at least on a process side, is when you're having a lot more loans being pumped into the funnel, we still got to move all those through the system and get them out, right? So we got a lot more, and we're just seeing a little bit more slowdown happening with that process. So, coming through that it's getting easy. There's a lot of things that go into that mortgage and a lot of hands involved: appraisers, underwriters, inspectors, real estate agents, home insurance agents, your mortgage advisor, the operations side. There's a lot of things that go in there that need to be controlled and even micromanaged at sometimes to give you a smooth experience. But this is sometimes a road course, and there is left turns and right turns, and we got to navigate, right, Addie?
I totally agree. And I would just reiterate a little bit more that going to 2020 and the changes, right? So you could argue the point, Casey, that sure, it's easier to get a mortgage now with technology, right? Wi-Fi has done an amazing thing for everyone, not just finance, right?
Yeah, no, right.
Grubhub and Netflix and screaming, cut the cord, all that stuff. But in fact, really, 2020 has brought forth, from my experience, a lot of scrutiny from an underwriting perspective, meaning we are not only crossing T's and I's as we were before, we're doing it with an even sharper pen and not pencil.
Absolutely.
So before the underwriter signing off, there's no eraser anymore. Investors are looking at everything, auditing files, all of this stuff. Particularly one example I can give is the verification of employment process is so much more under a microscope than it was last year. We are literally, in some cases, re-verifying employment every 2 to 5 days from day one to close date. Because seriously, there were people signing mortgages who lost their job that morning, early phases of the year, right, Case?
Absolutely. I mean, and unfortunately too, I just had a client the other day, offer accepted. Everyone's super excited, and they got the news the next day that, hey, their position is on the hot seat. And unfortunately they had to back out, right? Because now their job security isn't there. verification of employment's big deal, guys, because guess what? Everybody's working from home, right? So how are we trying to get a hold of people to verbally verify that they're working there still, because you're jumping through a bunch of hoops and you're trying to get a hold of someone that normally would be an HR call or an office manager right there ready to pick it up, but they're not in the office. They're not working there. You got to track them down. So it does make it harder. And I want to point out a fact that I saw, stated in here, that you saw other lenders too start to change depending on their model and how they're shifting their business. But you started to see them put their own risk factors and requirements out there that made it harder for borrowers to qualify. So raising credit score requirements because of pandemic and everything that was going on, and they were just tightening their risk, right? So those factors don't help someone get through a mortgage easier when you're increasing the qualification factors.
That's a really good point. And I would summarize that too, that 2020, the scrutiny and penalties for a sub 700 credit score are double and triple of what they were in years prior. And the reason why is based on the economical environment and the instability of the future of our country, the pandemic and the economy itself, the presidential election, investors are more inclined to be confident in investing and backing a mortgage for a steady 700 and plus credit score. And that's not discrimination. That's just the fact. And it doesn't mean if you're sub 700, you can't get a mortgage. It means what's going to happen. A, your interest rate will be higher. And if another lender says that there's no change in your interest rate, there will be a change in your closing costs because they will tack on the discount points for the penalty of the lower credit score. And
great point.
That has nothing to do with the mortgage advisor or the mortgage company. Even it's the investor, Fannie, Freddie, the people that these loans get sold to in the secondary market. So understand that statement does back that it is a little bit harder. It's not as easy as you might think. So there's a lot of people who, I have a high 600 credit score. I've got 15% down, which would be awesome, just hypothetically speaking.
Right.
And then boom shakalaka, they are Googling, average interest rates might be 3.125 nationally if you Google it or whatever,
right,
paying whatever fees, right? And then they go and talk to their local mortgage advisor, and lo and behold, they have a 4.5 because their credit score was 662. They maxed out their Capital One, right? Their Capital One card's maxed out. Then they took advantage of the Best Buy card to take out a 0% interest now so I can get this $700 TV just for and they didn't know. So it really, really, really is a lot more consequences to that lower credit score. But to bring it on the flip side too, the higher credit score might assume that they would qualify. They would qualify for, say, a jumbo loan, a loan that exceeds the 510 400 maximum conventional. Those jumbo loans, like we are going to do another episode coming up shortly about jumbo loans. We did one earlier this year. We'll revisit it because the jumbo market's completely different, and there's a lot of scrutiny and microscoping going on
for sure. And between lenders, every lender is doing some different stuff. At least stuff that we've heard. Different lenders requiring different reserves. All over the place.
We've got different people from different companies. We're all talking all the time. Hey, who can do this? Who can do this? There's Facebook groups, literally people posting, just mortgage advisors posting, who can do this? And it's a short summary of products.
It's really funny too, because I don't think most clients maybe don't know that, right? But yeah, we communicate to each other, even though we're competitors, right? We're still in this industry together. And so, the best way we can help clients if we can't do the deal is get them to a trusted advisor that's got that product, right? So you got to communicate. So we're always sharing information. What do you guys have? What do you guys got going on there? And that's how you can truly advise clients, by knowing everything that's going on around you, right?
Well, and I just got a call this morning from one of my friends at one of the big national banks, mortgage advisor over there. And he's an awesome guy. I've known him for a long time. And he's like, hey, Addie, can you do A, B, C, D, E, F, G? I can't give the details for privacy. It's like, our bank's not doing that right now. We've really tightened up on this and that. And these are standard guidelines. Yeah. And like, really, I can only do certain things for preferred bankers or people who are already doing business with us for X amount of years and before. So even the big banks are being very protective and very conservative because there's a lot of change coming up. So I think that's a really, really good segue of our next point.
Right.
I think we're on to number
3. And this is, and we all know, if you've been watching us Facebook Live, you know this is probably a hot button for Addison over here because he likes to get fired up on this. But
deep breath.
Should everybody refinance, guys? Like, I mean, should you refinance or should you not? Because what's being put out there is like, hey, rates are low. Everybody just get in, refinance, save on the mortgage interest, lower your payments, take cash out, do all this stuff. Just do it is what you're hearing. Just do the refinance. But is it a good option for you? And does it make sense right now?
Well, I'll tell you this, refinancing is not Nike. You shouldn't just do it. I'm going to drop that hammer down.
Hit him with the swish.
Bring him hot. But here's what's up. Like, there's a lot more factors to it, guys. And I'm really holding back. I'm putting my hands in the air. I'm trying not to clench my fist. My wife really wants me to focus on being less stressed. But it's a hot button for me because it's more.
Sure.
I had a conversation this morning. A gentleman that was referred to me on a refinance and asked him one of the questions like, okay, how big is your house? They had talked to like 3 or 4 lenders. Like, what do you mean? How big is my house?
Why'd you ask me that?
No one's ever asked. I talked to 4 different lenders. I was like, oh, well, I'm getting a year. I know where your house is. I asked you how long you've been in it. When was the last time you bought it? What you bought it for, the value, what you owe. What I'm trying to figure out in my head is, do I think I'm going to get an appraisal waiver on the automated system? And that would save us anywhere from $600 to $800, depending on a few different factors on the appraisal fee.
Yep.
And then I wanted to know, what's your big picture plan? When are you retiring? When do you want to retire? What are your pain points? Do you have kids? How long are you going to stay in the house? Because I want to check a couple boxes off. What's the cheapest way I can do this refinance? B, when is the break even of the total costs associated with refinancing? Absolutely. And how long are they going to be in the house? And then what is your big picture goal? Because if you're going to sell this next year, I'm not going to advise you to refinance. Yeah. I'm not going to. And it drives me incredibly insane. And I've worked with people in the same company who sit there and dial and call their entire client list, their book of business, and they use false urgencies to tell people to refinance, and they're not taking the time to do their job and actually advise. They're just trying to lock. Are you ready? How many people are you ready to move forward today?
Are you ready to move forward?
Are you ready to move forward?
You ready? You ready? You ready? I know it's like,
should I lock that today?
Should I lock?
The consumer doesn't even know what lock means half the time. Are you freaking kidding me?
And at the end of the day, guys, if they're going to sell in a year, why are you going to pump 10 grand of closing costs on them? But you can wrap it in your loan. They don't have to pay for it, Addy. They don't pay for it out of pocket. They just put it in a loan. It's all good.
Well, and before my heartbeat goes up a little bit more, like I chugged 30 ounces of Red Bull, I will just summarize. Hey, first of all, go back to our first advisement of really analyze the conversation with the advisor that you're working with and see if you feel like they're acting in their best interest. I will tell you this, if they feel like they're trying to close you on one call, they're not acting in your best interest. They are not. If they're taking the time to really ask a few key points of questions and taking the time to explain that, like one of the analogies I like to use is refinancing is a lot like buying your own house from yourself. So you have your current terms on the mortgage, right? You're going to purchase it from yourself. So you have the amount owed plus the cost it takes to buy it from yourself. You combine those two, and that is your new loan amount. It's crazy to me how many people miss the mark on explaining that to clients, and they come to like, oh, yeah, you explain it way better. And there's like so many more bullets to it to break down, but you got to understand, are they acting in your best interest? And then understand, relatively speaking, what is your estimated break-even point? And when I say break-even, it's your savings on the lower interest, hopefully, right? Yep. On a monthly basis versus the total cost it took you to get the lower payment.
Yes.
You divide those together, that will give you a monthly break-even.
It's 6.5 years, guys. So are you staying in the house for 6.5 years?
Right. Sometimes I would say it's a little, it's between 3 and 6, 3 on the low, 6 on the high.
Yeah, for sure.
And so much of it's loan amount. So people in the lower trigger, like the $150,000 loan amount, that's a low loan amount. It's tough because the fixed cost could be, relatively speaking, around $3,000 plus a new escrow. You're looking at $5,000, $6,000, $7,000 financed in. I mean, we're talking 3 to 5% finance cost just to refinance.
Yeah.
And a lower interest rate's not going to move the needle on a lower payment as much as, say, a $500,000 loan.
That's a great point. I wanted to put that out there too, because people will get lost, right? Like the savings, unfortunately, your big monthly change and monthly savings come from having higher loan balances. When you have a lower loan balance, that massive change in interest rate doesn't necessarily drop your payment a whole lot. I mean, you just have to look at it, right? Like, and I even noticed that on mine. I was doing my refinance, and I was like, I mean, we were getting close to, anywhere from 1.5% to 2% change in interest rate, right? And I'm thinking this thing just going to be crazy difference in payment, and they're like barely changed anything because it's a smaller loan amount. So it's just there's the savings are max of what they are for the loan amount size. So,
and I think one of the other things too, and this is kind of a combination, Casey, of the low interest rate environment and reputation versus should you refinance. There's a big difference in purchase interest rates, refi interest rates from company to company. Some are pricing them completely different. Yep. And then on top of it, there is a difference between a rate and term and a cash out, meaning you're just going to refinance your interest rate and nothing else, only finance in the closing costs or pay them out of pocket,
yes, sir,
or you're actually going to pull cash out. Two different interest rates. Now, I will preface, if you have a ton of equity, there might not be any difference, but if you're hovering on that, 80 LTV, 70 LTV, there is a big swing and a cash out versus just rate and term. And not a lot of people see that. You can get this Mercedes today for $199.
Yeah, $199 for the Mercedes. But yeah, no, you're absolutely right. And those are things as a consumer, you need to be trying to get the best advice you can from your loan officer. And hopefully they are giving you that advice, because if not, you need to be calling MLO. And how do you call us?
Are we gonna transition here to a little break? I like that little break. So
how you calling us? If you don't feel like you're getting your right advice, from the current lender, how are you getting a hold of MLO?
Oh, we've got that VIP number that you can reach out to anytime. You can call, text, direct 503
VIP
9038. And we're gonna bring in that little break music, take a little breather here.
Yeah, let some other people jump on the show.
Breathe in, breathe out.
And remember, guys, you can shoot us questions, right? You can shoot us comments. We'll see them pop up from below, and we'll answer them for you right there.
We totally
or
will.
like below.
We understand that. A lot of these questions too are personal, so we get a majority of people reaching out through email, text, or call, and that's comfortable. We totally get that. But if you want to participate in the show, you have a show idea, please feel free. And we like to remind everyone we are broadcasting live from the NLO studio. My name is Nett, your host of the MLO. This is my main man, Casey Carpenter. Give a little shout out, Case.
Yes, sir. My name is Case Carpenter, your guys' Navy vet and trusted mortgage advisor here at MLO.
And we bring an environment of transparent knowledge, insider information, not only for home buyers, home sellers, industry professionals alike.
Yep.
And if you're not watching us on Facebook Live right now, you can also subscribe, like, review. We're on every single podcast channel. Wherever you grab them podcasts,
wherever you're listening to those jams, we're on that stream, and we're out there on every channel. So, and hey, if you guys want to check out some YouTube videos, we got YouTube up and going for show.
The YouTube is a slow and a rolling, and we're taking the quality over quantity approach, which I think is rare in America right now. But going back to that podcast, if you are a listener, which is a majority of our audience, don't be afraid to come see what we look like. And look at Casey's ridiculous dance moves, particularly at the beginning of the video.
For sure. And as we just go along into these season 2 and season 3s of MLO, maybe we'll just upgrade these dance moves.
Oh yeah. And just to bring it together one more time, guys, if you want to get a hold of us and we can help you, a second opinion, a conversation, doesn't matter if you're ready now to buy a house, refinancing 10 years down the road, you just want to chit chat, talk, have a safe place, you hit us on that VIP. Once again, let's give them that number, Casey.
503
VIP
9038.
And you can also shoot us a direct message, like hit us up on the Facebook, whatever. Find me personally, my cell phone number, Google me. I don't care. Google.
We're
Casey.
out there, guys.
You
can find us.
We got CK's holding down our desk line, closing loans for us, so he's available as well. But good little break. That felt good. Very energizing. I feel like we got a good pace here today, Mr. Carpenter.
We got a good one. And we got 2 last items to hit here, and we'll hit all 3, or all 5 of our 5 myths we're going over. But number 4, let's launch right into it. And this is a perfect one to talk about because we see it all the time in this industry, guys. All the freaking time. You can apply for a mortgage after you found the home. Let me say that again. You can apply for your mortgage after you've found your home. Do we think that's a smart move, Addie?
That is not smart at all.
Not at all, sir. Not at all. Why?
Ultimate buzzkill in the mortgage industry. First and foremost, if you have a real estate agent who is willing to take you out to see property without an attestment of a pre-qualification at minimum or a pre-approval letter, you're not working with a very experienced real estate agent. I'll just tell you that right off the bat. They are desperate to take you out and don't care and don't value your own time. And to me, that means you don't value how good you are at the job. Now, there are acceptances in different situations. You might have Daddy Warbucks who lifts up his mattress and there's $2 million in cash right there. Yeah, you're not going to make.
We'll get a little verified fund slip and you're good to go.
Yeah, no, if you're paying cash, obviously not. But no, we see this happen quite often in where they want to go see homes and they don't want to pull credit, or they don't want to start the process prior to looking at homes. First and foremost, that's not smart from a financial standpoint, because you should understand what you're getting into in any purchase, whether it's a car, a home.
You think?
Yeah. I mean, I'm not saying analyze, how much it's going to cost to run to, Kroger grocery store and pick up some fresh produce, but any major thing, you should think through it and break it down and get an opinion and understand what you're getting into. Right, Casey?
Yeah. I mean, it literally blows my mind. And we say it all the time. I mean, this is one, if not the biggest purchase in your life. And people jump into that not knowing the cost or what their payment would be.
Mm-hmm.
Blows my mind, that you're going to spend $500,000 to $750,000 or $250,000, whatever it is. It's a lot of cheese, and you don't know the payment and what it costs.
Yeah, and you got to understand the variables, like the changes in property taxes, the closing costs. Do you need them negotiated by the seller or not? And the agent needs to know that to properly build out a home search for you as well. And I'll put this together because I don't want to get too long-winded, because we tend to do that from time to time, right, Casey?
Yeah, but we do got a good fact right here. And it puts our point out there.
Drop the hammer.
This was from realtor.com. Okay.
Oh.
Survey conducted June this year. Out of 2,000 active home buyers out there shopping,
survey says
52% were pre-approved. So half of them.
So rounding down, half the people shopping for a home have really buttoned up and assured that they're qualified and approved to purchase a home.
The other half have not. They're out there shooting in the dark.
I had some clients the other week too, Casey. Quick story. I get this call.
Okay.
Saturday.
Always Saturday.
And that's fine. That's what separates us from the weaklings, right? Mm-hmm. We try to be available on Saturday and we try to balance it out. But anyways, get this text and it's all good. That's how we better. It's like, hey, can you run the numbers on this house? We're going to offer. This is the agent. We're going to offer on this house today. Oh, great. I'm here for you. Yeah. I'm going to be here for you. I'll run the numbers. Run the numbers on all the options. The payment on that particular house, they were $100,000 over budget of what, they originally wanted. The agent talked them into seeing this house just in case, right? And the payment was $450 more than they were comfortable with. Those are conversations early in the process you need to have. Don't just like, oh, I got somebody right away. You need to understand, what does, 400 to 500 look like? What are the variables? What are the property taxes, the insurance? Are there any differences in the mortgage insurance as I go up? Do I want to go 3% or 5%? Am I going to negotiate closing costs to be paid by the seller or not? So those are some really important things.
For sure. And I got a good little story I'll add to that too, because it was the same thing. Helping out some, obviously our partners, we're always there for them on the weekends, trying to support them in whatever, they have going on. And honestly, that's when the activity is, right? They're out shopping and showing homes on the weekend. And as a trusted advisor, you need to be there to support your agents. My agent calls me. She has a client and it's not with me. And she had questions about it, right? The pre-approval process was taking a while. It seemed like they had their offer in, they're running up on offer deadlines. So they're extending these offer deadlines because what does the seller and the listing agent want to see? Mm-hmm. A pre-approval letter, right?
Got to see that.
The offer is in there. So the offer submitted. They're trying to work on the pre-approval letter. They're working with their, their local lender, bank, or whoever it was. And they're not getting that answer. It seems like the person's taking a while. And I, for a couple of days, we're just trying to just talk to this person because I knew, a few minutes of conversation with me could probably clear the air on everything. This went on for 4 days as they're extending their offer deadlines, right? I finally am able to talk to the client, and they are getting bad information where they're not even going to be able to be pre-approved. And we're sitting here hung up on a transaction and they aren't qualified.
It's unreal.
It's unreal. And like literally the lender could ask them a couple questions. Hey, what's your down payment? Oh, well, I guess that's too low for our program and it doesn't work, right? Whatever it is, they're not asking those questions. And these people are sitting out there hung up on pre-approvals because their lenders aren't asking the client the right question and getting them pre-approved, or just telling them they're over budget and we need to lower it down like you did with your client. Mm-hmm. It's a big deal right now in the industry.
Yeah, 100%.
Pre-approvals have to happen.
They got to happen. They got to happen. That's a big one. And it kind of merges together a lot of these points where underwriting guidelines, program guidelines, credit restrictions, whether higher interest rates for lower credit or higher down payment for jumbo loans. There's so many changes, guys, and you got to understand your options. And in any, one thing that my father taught me was, if you don't do your homework and prepare, you usually pay more money and you will be scrambling. And the most desperate person unprepared is going to lose. And another saying that they say is luck favors the prepared, right, Casey?
Luck favors the prepared. Yep. So my dad always hit me with, you gotta pay to play. That's what he'd always hit me with. You gotta pay to play.
Is that what he said every time you sat up to the dinner table?
Yeah. You gotta pay to play. Yeah, pretty much.
Put your earnings in the coffee can, Casey.
Yeah, exactly. Excuse me. Well, let's roll into number 5. Let's hit it. Let's hit it out the park for our viewers here.
Yeah, last but I think number 5 brings together a nice tie together, Casey, because understanding getting pre-approved, pre-qualified prior to looking at houses, there's a lot of people who might be contingent on selling a home. And with this year, it's been a rough year for everyone. And my heart goes out to a lot of families that have been affected to it. But the ones that are, floating along and maybe have the ability to buy a house, sell a house, whatever it might be, Casey, they might have been taken advantage of and maybe have utilized a route called forbearance on their current mortgage. And that rolls into number 5 for us, right, Casey?
Yes, it does. And mortgage forbearance means you do not have to pay back your loan or pay back the forbearance part of your loan or whatever that is. That's the myth out there, guys. Hey,
it's a big myth.
You do forbearance here, you're good to go, man. Don't worry about the payments. It's all good. It's all gravy. That
no ain't the relief case. Is free relief in America.
Yep. Forbearance is not forgiveness. Forbearance is not forgiveness.
Where's the t-shirt on that?
God, we need the t-shirt on it. But let's talk about it for a second. So if you guys aren't familiar with forbearance, what was put in place because of, COVID, and we have the pandemic going on. You had a bunch of, honestly, millions of Americans either struggling financially with their job, right? And then how do you afford to pay your bills if you are struggling? And our hearts go out to people that have lost their jobs. There's a lot of people that aren't working. We're very thankful to have a job every day. But in the wake of that, they put in some product, some guidelines, some relief to help people. One of this was forbearance. So as a mortgage holder, you could choose to put your loan in forbearance. What this is going to do is allow you to miss or skip 3 payments. Okay. So just easy. You get miss 3 payments. Okay. But a lot of clients and consumers out there believe that, or at least being led to believe that you do not have to repay these missed payments, or, it's just, you get to miss them and then you go back into making your payments. There's a couple different variations of this, but what it is Americans really out there are being misled because, guys, one way or another, if you miss your mortgage payment, you're going to have to make that up one way or other. You're going to have to bring your loan current at some point to make up those payments, or you're going to have it added into the loan if there's something else, depending on that lender and how they have their forbearance program. But at the end of the day, you're not just eliminating those 3 payments. You're not, ever going to not have to make them up. You're going to have to make them up one way or another.
Yeah. And I'd like to bookend that to the fact that Forbearance is negotiated off of a lot of different factors, primarily off the servicer of the mortgage, right? So it's not just everyone, and everyone has the same type of freaking forbearance scheduling, right? So the repayment is a direct negotiation or allowance from the servicer of the mortgage. You got to understand that, guys. It's so different, but a lot of people will be stuck depending on the circumstance, and it's per circumstance. Might be stuck for 3 months, excuse me, until they can do anything. 3 months of repayment on the repayment plan. Not the minimum payment, the repayment plan, which is paid in full, essentially paid back in full. Super hard to do. And depending on the circumstance, you might not be able to just sell your house, pay it off, and buy another one. Now, I can tell you I was able to pull that off with one of my clients this year, but it took so much.
For sure.
And it was off of a lot of and we're going to do a forbearance episode, and we got to be really careful compliantly what we say, because there's so many variances. But don't assume is the best way, and that even goes back to number 4 with getting pre-approved or pre-qualified prior, right? But if you do have a forbearance, like, and this is speaking to the real estate agents out there too, like, don't you want to know that's got to be ironed out?
Got to be ironed out,
because the market is so hot too right now in our area. The houses go in a week. So if you're 90 or 120 days out, what's the point of looking at the houses right now?
Yeah.
You could be working out that stuff. So,
and it can hold you up on your refinance, because I'm seeing that too. Like with refinance clients, forbearance is going to be there. We're not saying that by any means is a bad thing. We're just saying that forbearance, you need to be educated on it. It could be, the saving grace for you, and that'll help you for sure. Maybe you need that help and you're back on track, good to go. But like people that are current, refinancing, if you had a forbearance, it's one way or the other. We got to make up the payment, or we're going to pay it off somehow in the loan. So you're seeing it affect people in all shapes of forms, refinances, purchases, and stuff. And it comes back to the education part. You got to get educated.
You got to get educated. And yeah, man, that's 5. We came through it. I keep looking at the timer. I'm trying to be respectful and write it through. For sure. But to bring it, all together, guys, maybe we summarize it from the top. Interest rates. Interest rates are good right now, but there's a lot of different factors: credit, timing, lender requirements, discount points, all of that stuff. So it ain't the Mercedes $99 a month. You don't got to pay. Walk off the lot now, Jimmy. Come on down. We're clean, safe, all this stuff. So get with someone that you trust. Right?
For sure.
So that was number 2 or number 1.
Number 1, with number 2 being, mortgages, as easy as we here at MLO make them for our clients, they sometimes can have speed bumps and hurdles. And so sometimes they might not be easy for everybody. There's a lot of stuff that goes involved with that.
Yeah, that's a good point. And summarizing number 3, refinancing. Got to do it now. Got to do it now. Got to do it yesterday. This and that and that. Take a chill pill. Last week they were announcing, and I have to correct our announcement because we got on it, Christian and I, with Fannie and Freddie announcing the 50 basis point additional fee, which is normally getting passed down to the client on refinances. And I was encouraging everyone to take a deep breath. Like, this is supposed to start September. The market also moves. Like, we see basis point improvements of 50 or more in a week.
Yep.
Like, it is like, don't let sleazy mortgage advisors go out there and try to falsely get you to lock your own and move forward. It drives me nuts, because now it's been announced that it's delayed, likely December. Who knows? So, post freaking election.
Right.
So
and it's a total head fake out there, guys.
Head fakes. It
was a head fake.
A little razzle dazzle in the mortgage industry, right?
Right, for sure. And I mean, even for the sales side of it too, guys, like, we're going off of our best effort for the information that we're given from the higher ups above, right? For what Fannie's saying, for what Freddie is saying. And so when they said, you have the 0.5 point hit in, and they just announce it Wednesday night, right? And it's going in, and you're seeing rate sheets. And then all of a sudden they head fake us 2 weeks later and go, well, September 1st isn't the date. We're going to move it back to December 1st, right? So
the person with the money has all the power.
Exactly. And that is not cool. I don't care who you are. It ain't cool, feds. No one wants none of that 0.5 point crap.
Yeah, no, I hear you. And I think bringing it down off the tangent, focus on the break-even point. The big picture, is it going to is it going to make sense for you? Are you working for someone that wants to close you on the first call in 5 minutes? Are you getting a call from your mortgage advisor that didn't care about you on your purchase and then now is calling you out of the blue in the first touch base call and telling you to lock today because of this and that? Right. Where you're going to be at. So understand that. So moving to number 4 in summary,
you can apply for a mortgage.
Gotta get pre-approved. Come on.
Get pre-approved, man. Stop messing around.
Do we need to play a song for that? We need a pre-approval song. We'll get Joshua
song.
Billups, our amazing production. We need him to figure out a song for us. The pre-approval song.
Rough Riders. DMX.
I was thinking more of some sort of like it needs to be a jingle jangle mixed in with a little strong back end on the beat.
For sure.
And then your daughters need to give you a customized dance
routine. TikTok. We're working on it. TikTok.
Yeah, TikTok. You don't stop. Speaking of stopping, we are almost there. I think that's it.
Number 5, forbearance, guys. So as we talked about it, that one, you really have to get the right advice. You need to know what's going on because it's affecting a lot of people out there. It can help you. We're not saying that it's a bad thing. We're just saying that that's something you got to be educated on because it can factor into a lot of different things down the road. Yes, sir.
So many different things.
So many different fun things.
I turned on that closing music as you. That was some production savvy there.
No, we're getting better, guys. I mean, at a certain point, like Anderson Cooper is going to be calling us because he's like, dude, you guys look better than CNN.
I like TNT NBA halftime show. By the way, our Portland Trailblazers are getting their tushes kadooshed by the Lakers. He is tough. I mean, I even wore my goodbye Tinker Nikes.
Oh no. Well, I swear I just saw an update come through my phone that playoffs were postponed. So we got to check that out, honestly.
Oh, but
yeah, I think ESPN proposed.
Well, to land the plane here, once again, everyone who is listening on the podcast channel, we really thank you for your support. It means the world to us, guys. The reviews, the likes, the reach outs, the downloads. Man, we've had a big uptick in the last 30 to 40 days, which is fantastic. And it's great to hear from people all across the nation. And once again, you have been listening to MLO. And if you haven't liked, comment, subscribe, please do so, guys. It supports us. We love it. We want you to get notified every time we do a new podcast, live stream, or video. Hit us up, Facebook, YouTube,
all the streaming channels, wherever you're grabbing your podcast. Make sure you're downloading MLO. And shout out to all our real estate agents that are sharing our posts and stuff like that. I've seen a couple agents out there sharing our videos and stuff. So thank you guys, man. We're all about that.
We are. We're going to end this out. Shimmy, shimmy.
What's that Damian Lillard dance? I don't know. He's way better at it than I am.
Friggin' love it.
Yes, sir.
Till next time, guys. Once again, thank you for listening to MLO. Until next time, we'll catch you later.
See you guys.